Good evening, everybody. Hope that you are very well, and welcome to tonight's Contenders live stream number 81, where we're going to be going through log scale versus normal scale and EOS chart of the week. And I will end with Bitcoin for you all, because I know there's a bit of a move happening on Bitcoin. If we can, just before I begin, I just want to ask you one small favor, just to confirm that you can hear me okay right now. That's the only thing that I need right now is somebody. There we go. Thank you so much, Nick, for the sound check. I had a few issues as I was trying to load up the video, basically. It was not starting the stream. So yeah, sound okay, absolutely brilliant. With that said, then yeah, we can begin. Hope you're all doing very well indeed. Start with the disclaimer, obviously. Pause, read this if you have not already. So this is the way that I'd like to run tonight's live stream. So Contenders live stream. I see all the comments. Absolutely brilliant. So what we're going to say here is going to be starting with EOS chart of the week. Okay, so EOS chart of the week. I see great potential in this one. I then want to be moving on to the log scale and when to use it. So we'll be going over the function of it, when and why you use the log scale. Then I'll end obviously with questions. And I want to let you all know that the questions are going to be focused on, for instance, if you have questions regarding EOS chart of the week, or if you have questions regarding log scale, random questions or off-topic questions, I suppose, I'm going to say you're going to have to ask those in Discord. And in tonight's live stream, we'll be taking questions related to tonight's content. So it's not going to be going off on massive tangents on the questions. So I just want to make you aware of that. If you do have an off-topic type question, just ask in Discord and we'll be absolutely more than happy to answer that question. But that's what we'll be ending with tonight, the questions and answers related to tonight's session. Yeah, I also do know Bitcoin is moving right now. So Bitcoin is moving slightly. Nothing massive, but we're getting a bit of a move on Bitcoin. And I will cover Bitcoin at the end. Okay, 100%. I will look at Bitcoin for you. Okay, so do not worry, basically. And what I really love to say in these videos is that what you have to remember is to try and block out the FOMO, because I know when Bitcoin's moving a little bit, a lot of people are distracted, I suppose, or just feeling really big FOMO or emotional. But I think what I have to remind you here is what I'm going to be teaching you tonight is a skill that you can be using in 1, 2, 5, 10 years time, or essentially for the rest of your trading career / life. You can be using the skill that I'm teaching you tonight. So what you have to remember is the move that you're getting on Bitcoin now is the same move that's going to be happening in 10 years. So it's so important to give me your full focus and attention during the stream, because you're going to be just learning some massively important skills for your trading. So that's the first thing that I want to start with. Just give me your attention, block out Bitcoin. Do not worry about any move that's happening. The move is going to come around again. It's nothing even massive at the moment. It's just a little move, really. But yeah, that's just what I want to remind you that we will look at Bitcoin at the end. So do not worry about it. So I want to start off with chart of the week. So we are going to go over to EOS to start this. Okay. This is obviously for me of a swing trade setup. Okay, swing trade setup. If you had a keen eye, you'll know that I posted this exact setup for you yesterday. So I actually gave you this setup yesterday, but I want to talk about it in a bit more detail now. Obviously, when I posted it in Discord, I didn't really give any massive explanation behind it, did I? But I basically gave the entry yesterday, I gave the stop loss, and I gave the target. And for me to take profit one was the monthly. And I'm going to explain why this monthly is absolutely massive resistance as it stands. But that was for me the only key level here. You had the monthly as a key level, and ultimately, if we can claim that, I'm looking up for the high of the target, which is 945 sats. Got a very nice entry, stop loss, and take profit. And that was posted in the group yesterday if you were around to look at that. But then let's bring it over to everybody that didn't, I suppose. What I want to show you here is the monthly. Let me start off with the monthly. You'll see it's actually the only level I have marked on the whole of the chart right now. Okay, apart from this weekly, which we'll cover in a second. But so I have 2 levels marked on the whole of the chart. But this monthly, we're looking at this on Binance. This is the all-time low monthly level. So we are in price discovery almost to the downside. This thing looks absolutely destroyed, doesn't it? It really does look absolutely destroyed. when we really take a look at this on the monthly, you know, it looks awful. It really, really does. So you might wonder, Daniel, this thing looks absolutely awful. So why are you buying this for a swing trade? And the thing is, I see absolutely massive potential on this coin. Again, this is obviously a bit of speculation. We want to take it level to level, but the upside potential is hundreds and hundreds of percent. So you are seeing a great potential on this coin. What I want to talk you, I want to explain something to you here, very important. And I know we are only a technical analysis group. We only trade the charts, but there's just one thing of a bit of news that I found a little bit interesting. And the creator of EOS, the CEO, he actually left EOS. Okay, and this was like last week. He left EOS. So I feel that this thing is at all-time lows. The chart looks awful. The EOS just left, so that's going to have removed a lot of bag holders. And I feel that a lot of people have given up on EOS. A lot of people have given up on it. So this for me is kind of I suppose, an opportunity of, okay, I mean, I was not willing to take it down less than this. And so I was talking about like a 1%, 1.5% risk on my trade for a potential 25% gain. Okay. And ultimately what I'm going for here is trading the range. Okay. So you can see here, we had our series of highs, we had our series of lows. That's what I was posting for. So really simply what I was looking to do is take this into a range. We could put this on as a parallel channel almost. Okay, where there's the highs, there's our lows. Okay, and we can see how this was prior support. Now it's resistance. And what I have here is I'm looking for a range. Okay, I'm looking to trade it back up here ultimately, back down, back up. If we break the higher of the range, we go to our higher targets. If we break the low of the range, well, for me, that's just kind of give up on the coin. And you know, I wouldn't buy it any lower than this. I would not buy EOS any lower than this because it would go into price discovery, and I'm not interested in doing that. Okay, I am only going to trade the charts on this one. So for example, if it done here and it come all the way down here, I'm not going to trade it. If it ever come back into the channel, that offers me another trade. And there's your deviation from the low of the channel. And I've got a new trade set up, which would look very similar to this one. The same as here. We deviated the high of the channel, and you could have taken a short on the retest here and traded it all the way back down to the low of the channel. Okay. The same here, where you got a bit of wicks above, could have traded the short all the way back down. And the same for me, exactly the same theory here on EOS, was that I'm looking at this as a bit of a deviation of the low. And really simply, I got in a little bit better than 756, but I got into this 7.4. Well, when it was at 7.48, obviously I'm trading on Bybit. I got in it when it was 7.48. And my take profit one was really simply the monthly. And obviously now we are making our way all the way back down to entry. So that's something to bear in mind. We're making our way all the way back down to entry. So I might get stopped on the rest of the position, maybe. But yeah, this was my opinion on EOS. I just feel that this is I feel it's a really well-defined trade in terms of, I know why I'm trading this, you know, I can tell 100% why I'm trading it, okay? We had a double bottom, we took the low by a wick, and really simply, I entered straight away. Literally, as soon as we done that, is when I got my entry. I knew where I wanted to target, and I know where I'm wrong on the trade, okay? I just want to highlight, obviously, it did hit my take profit one being that monthly, which we know has been prior support, resistance, back into resistance, back into resistance. So I suppose there's a secondary way that this could be traded now. Okay. Obviously this is speculation, but let's say we break down and come back above, or we just start to consolidate. The secondary way that I believe that this could be traded is actually looking at it more of a reclaim of the monthly. Okay. So you miss out on the first, 5% here. But if you actually reclaim that monthly, then you still have the same trading setup for about a 17% move to the upside. And it could be argued that this is a bit more of a safer setup going forwards, because you'll have actually reclaimed that major monthly. Like, I cannot stress how massively important this monthly is. Like, for me, this monthly is really, 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 really big resistance. Okay, it's really big resistance. But if you can reclaim this big resistance, it means the upside potential is then a lot, it's a lot more probable, let's say. So what I would like to do is just say this in terms of a probabilities type of perspective. If we're looking at this as a trade and we have this is our take profit one, this is our take profit two, we could say still the probabilities of getting up here are low. We could say there's only like a 30% probabilities that this plays out because of the fact the coin looks absolutely awful. It is right at the low of the range and it's below the monthly. So we could say there's only 30% probabilities that the trade actually comes to target. But what we could say is if it reclaims the monthly and we take that as the trading setup and we got this as us, that's our target. Well, then we can say that this goes from a 30% to almost like a 60-70% probability. So you're almost doubling your probabilities of the trade playing out because you have reclaimed that major resistance level. Okay, so this is just something that I want you to bear in mind. The way that I'm approaching this is still my original setup. I want to just highlight that it has hit my take profit 1 and my stop loss is the same. So, you know, I'm still in the trade under the same perspective, but it's very different now. The fact that we've hit that resistance once, we've come back down. This is just another perspective of a way that I think you could trade it with a reclaim of the monthly. Massive level. Okay. If we reclaimed that, I fully expect us to come back up to the high of the range. So it's actually a really easy setup in that regards, I feel, in terms of, you know, it's really not that difficult to comprehend, I suppose, exactly what I'm looking for here. So yeah, honestly, there you go. That's the EOS setup. There's two ways, honestly, there's two ways you could approach it. One would be a reclaim of the monthly, and one could be literally the way that I was doing it originally, which is with the validation below the low, looking up. Obviously, if Bitcoin continues to push up, it's very likely that this does take the low. Okay, so this is a little bit of an inverse correlation. If Bitcoin goes up, EOS is very likely to go down. The only thing that I do want to bear in mind for all of you that I'm trading this on the USD pair on Bybit. So actually Bitcoin going up in that regards helps. But there you go. That's what I wanted to talk you through. So let's go back to the live stream tonight then. So we're going to be going through log scale. Let me just take a drink. Oops. Excuse me. So log scale. This is what we're going to be covering in tonight's educational stream. So when to use log scale. This is a question. The reason why I'm doing this live stream tonight is because you've all probably saw the trade that I took off of 42,000 by now, and it was all based off a log scale. So because of that prediction and the way I traded it, well, I suppose the floodgates opened to the log scale discussion once more. So I was like, I need to do this stream because the amount of questions is a lot. So what we want to be going through is when to use log scale. Okay. Oop, I think I've accidentally edited that incorrectly. But basically, we're going to be using log scale when an asset is extremely volatile in very high percentages. And we are going to be going through examples of this. The secondary time you want to use this is when you want to check old, you know, in brackets here, years old data. Okay. Or to get a high term time frame perspective, or alternatively, you could view this as a different perspective. The question that you're asked all the time is when to use log scale and when to use, we're just going to call it normal scale on TradingView. And really simply, this is the 3 times that I'd be really looking to use it. If an asset is extremely volatile in terms of very high percentages, up and down is a very high percentage. Say we were talking 100, 200, 300, 400, you know, plus massive percentages, log scale is useful. Or if the data that you're checking is from like 1, 2, 3, 4, 10 years ago, you're going to want to use log scale. And thirdly, you know, to get that high/different perspective of the chart. Okay, so now we'll go through some examples of this. So here we have a chart, and for example, viewing a chart such as this, I would use log scale. The reason being, I'm looking at a chart of hundreds of percent. So this chart has moved up hundreds of percent. And again, don't worry, I will load up these charts and show you so you can actually view how this looks when you open in the chart. But the reason you would use log scale on this is really simply the fact that it has moved up hundreds of percent. Okay, simple as that, really. Next, the same chart, I would also be using log scale as I'm checking data that is years old. So we're looking at a long time in the past. So that's another reason why I would be using log scale on the chart. Okay, so it's really not that difficult. Here we have another example of Bitcoin, and this is the where it gets very interesting, I think, for a lot of people. So when I need to get a high term time frame perspective on an asset, which has been very volatile over the data set. So we all know this is Bitcoin on a high term time frame chart. And we obviously know we had the lows of our channel, we had the highs of the channel. And this channel does not work on normal scale. The channel only works on log scale. And as you can probably remember, this channel was respected to, within a few dollars before hitting the top of the channel, before getting a rejection of 15%. So this channel gave a rejection of 15%. And if you had used this channel on normal scale, you would have been having a bad trade. Okay, you'd have been in a bad trade. Whereas if you knew why you use log scale, you would have known to put log scale on the chart when looking for this channel, and it would have aided you in shorting the high of that impulse for a 15% move to the downside. Okay, and the reason why I was using log scale on this chart is because I was looking at data which is years old. Okay, so this obviously started back in 2017. We're in 2021. So the years old, check. That's why I'd use log scale. And secondly, we are looking at data which is very volatile. Okay, we're looking at over 100, 200, 300% moves here on Bitcoin. So that also ticks the box of very volatile assets. So when we're looking at this on the high term time frame, this is taken from the weekly chart. When we're looking at the weekly / really daily, weekly, monthly charts, higher term time frames, we can put this into log scale to get that higher term time frame perspective on the chart. Okay. And should you have any questions, please let me know, because I want to make sure you all fully understand this, because it's really, really, really important. Okay. And then this is the reason why we obviously got a lot of questions recently about the log scale, because you would have known that the target that I was giving was $42,000. And I was only able to target $42,000 via my log scale fib pool, a viewpoint many other traders missed. And we had a 30% pullback. So as you know, this, and we're going to load up the Bitcoin chart in a minute to explain this, but this was a Fibonacci log scale pull that I found to give me the perspective that $42,000 was going to be offering high term time frame resistance. And this log scale pull, well, it literally only worked on the log scale. Again, if you had done this on the normal Fibonacci scale, you would have incorrectly traded this move. Okay, like period, you would have incorrectly traded it. Whereas if you had known to adjust to log scale, because the move is very volatile, it actually assisted me in shorting $42,000. The high of the Bitcoin move was $42,000. We dropped all the way to $30,000. We had a 30% pullback on Bitcoin from the 1.618 Fibonacci target. So via adjusting to log scale, it really, really, really was the main focus, the absolute pinnacle focus of the short position that I took off of $42,000. It was all to do with that log scale 1.618. Honestly, it really was. So that was the reason why how I managed to short the all-time high on Bitcoin here for a 30% move to the downside, and it was all to do with the log scale, so that you can see how massively important it is. It's really, really, really important. And I the two pullbacks that we've had on Bitcoin, we had the 15% pullback off of the channel, off of the log scale, and then we had a 30% pullback a week later off of the log scale Fibonacci pull. So it's just so crucial to understand that. Okay, and this is the thing that you need to be aware of. So when using log scale on TradingView, it is very important to remember to click fib levels based on log scale, or the Fibonacci levels will be incorrect. So if you're switching into log, okay, you're going to want to make sure log shows blue, and then when you do your fib retracements or extensions, you have to tick this box that says fib levels based on log scale. If you forget to tick this box, you will be using totally incorrect data, and you are going to lose trades from using the wrong data. So it is very, very, very important when you're going into log scale to make sure this box is ticked. Otherwise, you're going to be losing a lot of money. So that's something that I wanted to make you aware of there as well. Okay, what I'm going to do is I'm going to bring over onto a chart here. And I'm going to show you some examples of why we're using log, and just so you fully can understand this, okay? So we will do that example over on Bitcoin. So if we load up Bitcoin, I suppose this will bring us in nicely into looking at this on a perspective of what's happening here. But what we're going to do first, we're going to go to the weekly chart, and I'm going to show you the fib pool that we used to get this $40,000 target. Right, so I'm going to show you on Coinbase. It's a little bit neater. Well, firstly, what we can do here, you can see the perspective that I've got here. I've got an Elliott wave count. So firstly, remember point number one, we use log scale when the asset is extremely volatile. And I suppose this leads into a really nice example. This Elliott wave count, can you see how impossible it would be? It would be absolutely impossible to label this wave 1, 2, 3, 4, okay, on normal scale, because can you see how I just cannot see what's happening? I literally cannot see what's happening on normal scale. The only way I'm going to be able to see this correctly is by adjusting to log. Excuse me, 1 second. Excuse me, I'm really sorry. But you know, this just massively highlights the point. The reason why I cannot see this correctly is because what you have to remember, in terms of dollar moves, these are small in comparison to this, whereas log scale is obviously basing it off of percentages. So the percentage moves that you're having here are obviously actually bigger than the percentage moves that are happening here. But this, in terms of dollar value, is a lot bigger than what's happening down here. You know, from here to here is a $100 move, which is crazy massive percentage when you're trading at $100. But when you're trading at $35,000, a 100 move is absolutely nothing. So, you know, log scale is obviously basing this off of your percentages, and that's why you get the difference in scale. But it just highlights to you there straight away, why do I need to use log scale? Because the volatility is so high, I cannot even see the chart correctly without changing to log scale. Okay. Secondly, why do I need to use log scale when looking at this chart? I'm looking at data all the way back from 2015, and now we're in 2021. So that meets criteria number 2 of the chart, and data that I am looking at is very old. So I'm going to need to switch to log scale to efficiently look at this data. Okay, so it meets criteria number 1, meets criteria number 2. Criteria number 3 was that I want a high term time frame / different perspective, and you know, that's why I'm switched to log scale on this. You can see that's how I've based the Elliott wave count here, that we really had that wave 1, 2, obviously starting down here, 1, 2. This I think I actually had labeled like this, and this was a running flat, 1, 2, 3, 4, coming up for a 5th. I can't remember if I had this as my running flat. This isn't so important, this first bit, but then we obviously had the ABC, and then 1, 2, 3, putting in a 4 up for the 5th. Okay. But yeah, what I want to show you here is actually the way that we're getting this log pull. So obviously this gives us our channel. We all know that we had the 15% pullback off of that channel. And now for the Fibonacci, what I was doing here is taking it from the low here, or obviously the low in December 18, taking it up to the high of B, which was obviously your high in June 19, and then taking it down to the low of C, which was obviously in March 2020. What I'm going to have to do is click on this. I've already got it, but you can see if I have not got this clicked, see how this gave me a massively wrong value. So when I've got log scale on here, I need to tick this, and you'll see straight away, we go from $21,000, ticking that, we went to basically $42,000. If I lined this up exactly, I must be slightly off on one of these pivots here, because it was 42,000. Slightly off on A. And, you know, if we zoom in here and line it up exactly, it was to $42,000. So that's basically the sole reason how I managed to get that 42k target, and how we got a 30% pullback off of that. And it was simply by using this as the log scale and saying to myself, okay, if we're looking for a target here, we can be taking the pivot of, because this could be viewed, obviously this can be viewed in a few different ways. We're looking at this as an impulse, this is a retracement, and that's your next impulse. Well, really simply, that's where you can be looking as this as potentially like a 1, 2. Okay, and then we get our retracement for a wave 4. Yeah, so that's basically the reasons why I done that. Okay, so this impulse, I was looking at the correlation of this impulse, and that's what gave me the that's what gave me that value. If I clear this up a second, what I want to show you is, let's say now we're looking at a retracement, and let's just say hypothetically that we believe that we're going to get a big retracement. Okay, I'm not saying this is going to happen. This is just for educational reasons. But let's say we thought we were going to get a big retracement. So what we would do is we'd take our low Fibonacci retracement from the low here up to the high. And what we're going to have to do is change this to the log scale. Why are we changing this to the log scale? Let's just repeat this one more time. We're looking at data which has just moved up nearly 1,000%. So does that meet criteria number 2 of this? The chart is very volatile. The answer is 100% yes. This is a very volatile chart. Does it meet the criteria that the data is old? Okay, this is a little bit subjective, I know. This is about 301 days old, so it's less than a year. I would say that does not really fall under the criteria of number 1. It's not really old data. It's less than a year old. But it does meet criteria number 2, which is very volatile. So this is where you could pull this normally. Okay, and you could look at it in normal scale. And you could take another perspective. So this is criteria number 3 to give you a different high term time perspective. I think it's absolutely valid to do a normal pull here as well as a log scale pull. You'd take a look at both of them. So we'd put this into log scale because we're on log scale. Okay, that. You see the values that we get have totally changed. Let's say we were expecting a retracement. We could be marking out some key levels such as $16,000. We'd be marking out levels such as $9,000 as potential retracements if we really thought this was going to pull back hard, which again, we're definitely not saying that's going to happen. But if we did, we could be looking at these as our potential reversal areas based off of the log scale chart. Okay, so that's how you use the retracements. Again, on the extensions, you're going to be wanting to make sure you've got that ticked, basically. And that honestly, it's really not that difficult. Like this, today's lesson is I want to say fairly simple. To be fair, it's fairly simple, but it's one of these things that get messed up, or just people don't really fully understand. People don't really know. That's why I'm doing it, obviously, to help you and so you all understand that. Because literally over the past 2-3 weeks, it's given log scale has given 2 amazing trades. So it's so important to fully understand why I was using log scale, how I was able to give everybody that 42k target for a 30% drop. That was pretty nice. See, there you go, really. And then obviously for the retracements, I saw just out of the corner of my eyes, that's the same place on the retracements as well. Okay. Any other questions? Write out your questions and I'll be absolutely more than happy to take your questions in this live stream. Okay. So I just want to make sure everybody really does fully understand this. Okay. It's not too difficult, but as we will always say, no question is a silly question. So, you know, any question, it may be really basic. I can assure you somebody else will have a really basic question. So you got to ask your questions. That's what you're here for. Even if it's really basic, I honestly don't mind. Okay. So this is what I want to say here. This is a picture of an old chart. So looking at something with a different perspective, just realized looking at something with a different perspective can give you a better trade. So we can see how having that perspective difference when looking at log scale, it really can give you a better trade. You know, if we were looking at normal scale on some of these Bitcoin moves, we would have just not actually traded well because the levels were broken with ease. Whereas when we flip to log scale, we get that actual high term time frame perspective when it's actually managed to give some amazing trades, like truly amazing trades, like currently shorting the all-time high on Bitcoin. So, you know, and it's all from that different perspective from having the log scale. It's really powerful. Like it's really underrated, I suppose. So yeah, what I'll say now is, do you have any questions? And we will take them. And then we're going to move on to Bitcoin, which I'm sure you're all looking forward to. So, one question. If you have any other questions, ladies and gentlemen, please ask. Please ask. But here we have one. Why not use log scale all the time as it represents the move based on percentage move versus just price? The reason why I would not use log scale all the time, really simply for the fact I have a particular, quote unquote rule that I would never, ever, ever, I would just purely never use log scale for day trading. So if you're day trading, scalp trading, I would never use log scale. Okay. So for, 90% of my trades are based off of day trades, to be honest. And so I would never, ever, ever, never use log scale on day trades. So really simply, the only time I'm ever going to use log scale is if I'm looking at really volatile data, okay, which is not happening on day trades, or if I'm looking at really old data, which again is not going to affect me at all on day trades. And I wouldn't even use log scale for a different perspective in a low term time frame. I guess that's a little bit of confusion, maybe, that perspective number 3 or criteria number 3 of to have a different perspective of the chart. On a day trade, I'm never going to be thinking to myself, let's look at log scale to get a different perspective. It is truly, really only that different perspective on a high term time frame, on a very volatile or old asset where I need to look back on the data. Okay, for 90% of the time, you are not going to be wanting to use log scale. It's only got a few use cases, and for the vast majority of my trades, I'm not going to even be looking at log scale. It's very much only on those higher term time frame trades. Okay. Apparently we have a few more questions, so I'm just going to give this a few minutes while they're collected for you. Okay, so we will come back over to these questions. La, 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 la. Done. Well, maybe while the questions are getting collected, we can move on for a second and come back to the questions as they sort of roll in through. Yeah, I think I suppose I'll do that. So we'll resume the questions towards the end, as I guess people are still consuming the information, which is fine. So we'll come back to the questions should people have any more. Maybe I guess it was a fairly easy stream, to be fair. Maybe everyone's just understood. So yeah, we're going to take a look at Bitcoin. All I will say is obviously in the next Champions live stream, which is on Sunday, we are going to be continuing with the live trading series. We're just going to jump on stream, start live trading. Obviously, last Sunday we done a live trading stream, and during that stream, we actually made I made $15,000 on the stream on Sunday from a short position taken, where we actually shorted the high of the stream and we closed at the very dollar low of the stream. It was absolutely amazing. If you haven't watched Sunday's live stream already, make sure you go back and watch that stream, because you saw just absolutely amazing trade. Like, if I say so myself, we shorted the absolute high and closed it at the absolute low for a 10% bounce. Like, it was a special stream. If you haven't seen that already, make sure you watch that. And in Sunday's stream, we're going to be continuing with that, and we're hopefully going to make another 15 grand on stream as we continue with that live trading series. And that's something to be aware of and look forward to. Okay, if you haven't watched it already, make sure you do. So, summary of tonight's stream. Okay, actually, what we have here is a few more questions come in. Before we do the summary, I'll take the questions. Makes sense. You said Logscale has given 2 amazing trades. Correct. The first was 42k. The second was the channel. So the second was the channel. What I will do is I'll zoom in and show you how that channel really did give me a very, very nice trade. I've deleted it all, haven't I? Let's try and go back. back. Okay, so this is the second trade that it gave. Well, the first trade, and the second was obviously the short of a 42k. The first one was how I traded this, and this was all documented live in the group as it was happening. So there's no hindsight, no any of this. This was all live documented in the group. But I managed to long $30,000. Okay, so I longed $30,000 breakout on Bitcoin. Okay, and I was buying and buying and buying and buying and buying and buying all the way up to my target off the high of the channel. if you go back and read through the poster of the day, it was a special day to be following around in the group. As we basically longed the breakout of 30k, and I took it all the way up to my channel high, where I stopped buying. Again, we're going to need this to line this up exactly, because it literally hit to the dollar. So if we just put these on the pivots exactly, this needs to just come onto this pivot with the magnet tool. Needs to go on pivot with the magnet tool to line this up exactly with the magnet tool. Going on here. Let's just delete it and just draw it again really quickly. Okay, we come back down. Okay, here you go. So this was the magic. It really was. We come all the way up, and from 30k break, I was buying. This was the day where I made $5 million. I made $5 million in a day, and it's because I went absolutely crazy buying so much Bitcoin, extreme high leverage. Obviously, I'm not recommending people to do it really, but I was trading with extremely high leverage. I bought so much Bitcoin, and it's because I had an amazing plan. Long $30,000, sell it all at my channel high. And I was not worried at all about any of the mini retracements during the pump. I had a clear plan, and I executed it very well. Let's just say it like that. And we moved up to the channel high, and look at it. Just look at it. Rejection, 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 rejection. I sold at the high, and then I stopped buying, because what you have to remember is I was buying. We come up, we hit the channel high. I stopped buying, and Bitcoin literally dumped 15%. A coincidence or not, we'll have to never know, I suppose, but it was pretty special. But yeah, that was that channel, and it's still come back into now, really. You then had a bit of resistance, moved up to 42k. You come back to it almost. So yeah, that was a nice resistance back into support, really. You can see here, resistance back ultimately into support. Okay. So yeah, that was the other trade. That was a special trade that day, from 30 to 30 to the channel at 30k to the channel high, buying everything, and then it literally hit our target, and then dumped 15% when we stopped buying. It was so special that day. And then when we hit $42,000, the all-time high on Bitcoin, shorted it, because I didn't actually short that channel high, but I did short $42,000, and we dumped 30%. Both those trades were special. How did you know that was the top rise in Bitcoin to draw the? How did you know that was the rise in Bitcoin to draw the fib? So I didn't have to know where the high was on Bitcoin to draw this extension fib. Okay, because what you have to remember is this extension is working off pivots that are already in. Okay, so I could take it. I was taking it from this low to the high to the low. And so I didn't need any other pivots. All you need is the ones that are already in. I needed this, and I needed this. That gives me the target. Didn't need anything else. Could have it gone through this? The answer is 100% yes. It could have gone through that. But I was trading in terms of probabilities. I was obviously looking at a little bit of confluence on the lower term timeframes, definitely. But that was the absolute main factor of me taking that short position off of 42k. Yeah, and that's how I knew those three pivots, because those three pivots were already in, and it's really, really, really simply low up to the high, down to the low. Okay, so if you got a little understanding of Elliott waves, you could say it was this. Okay, and that was potentially wave 3. We could go higher, but you're basically just looking at this impulse to that impulse. Okay. Hi Daniel, would you also use log scale for a high term time frame Elliott wave count? The answer is yes. Well, I suppose my answer is yes, if you're looking at your Elliott wave count, which is historic, which generally it's going to be, you're going to be going back a few years. So that means criteria number 1 is generally also going to be volatile. So the answer is yes. I would be leaning towards using log scale if I'm looking at that past data, definitely. I noticed that if the log scale fib check is on and the chart is not in log, the check does not apply. So what can you do to put it on by default on your template. I am not sure of a default or an automatic way of doing that, if I'm totally honest with you. I'm not sure if you can apply this to a template that maybe the template's just called log. I've actually not tried that. If I'm honest, I've not tried to do that in an automatic way. All I ever do is if I move to log scale, I will just manually go to log. And if I then move it off a log, I'll just always make sure that this is just, you cannot tick it or untick it. It's just like grayed out because we're not in log. So that option only becomes available when you're actually in log scale. You see, when I take it off log scale, the option goes and I cannot tick it or untick it because like the option's just, it knows we're not in log, so we're not going to want to do it. But when we go in log, that option's only available for log. So I've not got a template that just says log. All I do is when I switch to log, because you have to remember, I'm not doing it very often. So like 90% of my trades are not on log scale. So for the few times I will look at it, I will always just make sure that box is ticked. No, nothing automatic or quick on my behalf. Yeah. Those are those questions. That was part number 2. We have more questions coming in. And we'll take a look at Bitcoin. All-time high targets. Do you also use log scale? And what do you prefer? Speed fan, pitchfork, fib extension, or just blindly? That's a good question. No, I wouldn't say like I prefer really one thing over another. What I love to do is look at confluence. So let's say when we come up to that high term time frame level, I did not just short just because we hit the 1618. But what I did do is when we come to that level, I was aware we were at a resistance region. I started to see absorption. I started to see some divergence. And I started to see that negative delta come in. And that's my trigger to short. So it was not placed purely and simply off that 1618 because price could have just gone straight through. But it's being aware of the level. When the alert goes off that we've hit 42k, it's zooming in on the price action. That's how I got my trigger by a lower term time frame confirmation. And I can't really say I love, I like the speed fan, I like the pitchfork, I like fib extensions, I like fib retracements. It's like one thing is not better than the other thing. And like Eagle's levels, all that, they're good, but I'm not going to say like they're better than fib retracements. Like everything is at its own level, and it's how you integrate that. Not one thing is better than the other thing. To be honest, like there's not one thing better than this. Not, it's just how you integrate this into your own system, I suppose. And for the all-time high targets, do I use log scale? The answer is yes, because what we're looking at now is very volatile. Okay. I've realized that even on my answer is no. So really simply, my answer is going to be no, because I have done both, and I find not using log scale on lower term time frame is a lot more precise, because that's literally how I take the majority of my trades, and I'm trading very well on the lower term time frame. So I mean, I'm not going to tell you it's incorrect. I'm not going to tell you can't do it. All I'm going to tell you is this is how I trade, and I would never use log scale on the lower term time frames, and I trade well. So you are more than welcome to use log scale on the lower term time frame if you want to. I don't. So that's my thoughts really. I personally find it more accurate without log scale on the lower term time frame. Is log scale better than to predict high term time? Yes, log scale is arguably then, yeah, better. And it's because we're looking at such volatile data. I mean, you can obviously look at both. I wouldn't say only look at log scale. You can look at both, and sometimes you might even find confluence between them both. You might see maybe a 2.618 lines up with the 1618. So 2618 on normal scale lines up maybe with the 1618 on log scale, and then what you have is confluence. So it's not like 100% use this, 100% use that. It's kind of like, you can look at both and then, see which one makes more sense, see which one has more confluence. Okay. But yeah, I would generally be saying log scale is better for this. Cool. Cool. So there you go. That's all the questions then that we've had thus far. So we will resume where we were with the summary. And now we're going to look at Bitcoin. So the summary of the points that we've gone through tonight are: use the log scale for historic data. I think hopefully that's really clear now. Also very useful for extreme volatility. Okay, when we're getting that big percentage moves, all-time high is obviously a big percentage move. And it never hurts to check both scales. You know, at the end of the day, I'm not, like the question, I'm not going to tell you 100% you have to use this, 100% you have to use that. I mean, you can look at both and you can make your own informed decision, I suppose, off of what you think. I can give you my perspective of how I trade, and I can tell you why you would use both scales. If you really want to look at log scale on the lower term timeframes, that's fine, I suppose. And even on the higher term timeframes, like all-time highs, it really does not help. It really does not hurt to look at the log scale, look at the normal scale. Maybe you find some confluence between them both, and then you've got an even stronger level. Okay, so I really hope that has made that very clear why and when I'm using log scale, and now you can all understand that fully. Okay, we've got some more questions that have come in here. Two more. Yes, I think yes, and we can look at that. We can look at that as well. But yeah, I would be inclined to use log scale. Or on this retracement, I'd actually be inclined to use both. So this is one where I think I would look at log scale pull and I would look at the standard scale pull. And then, so we'll do that tonight so you understand. Don't really get that. Can we use log scale horizontal? I suppose what you mean is, can you do this? I think this is your question. So here we are on the log scale. I guess by horizontals, you mean like this would be classed as our weekly level. But what you're going to see is here we are on log scale on the weekly. When we take it off log scale, that's still our weekly. So your horizontals are not going to change. That's a weekly on normal scale. That's a weekly on log scale. That is not any different. Okay. I hope that makes sense. The horizontals are not going to change. The only thing that will change are your Fibonacci levels. Okay, Fibonacci is the thing that's affected by this the most. Your horizontals are not going to be affected. So the answer is yes. You can use log scale for non-log levels, horizontals, because they are exactly the same, as you can see there. Okay, that's a horizontal on both of them. So I was going to explain the wave 4. Let's just hypothetically say this is the top of wave 3. Again, I'm not saying it is. We can 100% go higher here, and wave 3 could be pushed up again. Okay, let's just acknowledge that it can happen. So this wave 3 is maybe not finished yet. Okay, and I am actually in a long on Bitcoin at the moment, so I'll explain the long in a second. But yeah, in terms of the retracement, I think it's absolutely acceptable to take this and put it on log scale. And this is our log scale pool. What I would do is take a picture and say, this is my log scale fibs. And I would do the same, take it out of log scale. Okay. And then do the standard fib like this. And I would also take a picture. And now I would try and compare them both and say to myself, okay, have we got any confluence lining up between these two fib pools? So we could get this one. Okay, so I'd see on the log scale, we have the first retracement at 24,000. That would line up with not really anything else. The 382 is 16,000. That lines up with the CC. So what I would say here is I have a confluence if we come down this low. There's a big if. If we ever come to $16,000, that's the 382 on the log scale and also the CC on standard scale. So what I would say is like $16,000 is a massive, massive support level because it's the log scale 382 and it's the standard scale CC. So you can see like that would be screaming at you like this is a really, 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 really good opportunity, can't you? Okay. So that's kind of where I'd say it's absolutely acceptable to use both. And then what you'd be looking for is confluence between two of the levels. Okay. So I hope that makes sense as well. And now we're going to end by looking at Bitcoin then. I hope that has answered everybody's questions. So I want to show you this post from earlier in the day of how I managed to get into a long position earlier, which I'm still in. And by the way, I've created a new challenge account, I suppose, one that I want to use on live streams. And I'm going to show you this position that is in at the moment. Okay. So this is just a relatively, well, it's a very small account that I'm basically created of the sole intention of using on live streams. So this was a position long that I took earlier. As you can see, it's long from almost the very low of the move today. So it's almost long from the low. And I want to explain how I got into this really perfect position for even today on this small account, making about $1,700. Okay. I want to explain now how I got it. It was really simply, I scalped along from the low of the range, and it was very nice because I had a very nice invalidation. What I'm telling everybody is the stop loss for me is really simply below that low that was made at 12 p.m. That was the invalidation. Really simply, if it goes below that low at 12 p.m., I was going to close that long. And now I want to show you how this was so perfect. We zoom into the chart here. Okay, we're zooming into the chart. That low at 12 was not taken out. As we can see here, we'll move along, higher low, move along, higher low. We move along, another higher low. We now sit all the way up from the entry at 42,200 at $36,400. So I was able to capture all of this move by really simply having a very good invalidation. And my invalidation was if that low was taken, I was going to close the long. That low was never taken, and I managed to capture all of the upwards move by having a very simple plan. Very simple plan with a very simple invalidation. Okay. So basically that's kind of what that's how I'm this is obviously across all my accounts. All my accounts are long at the moment. I'm talking about day trades now. All my day trades accounts are long at the moment. And I managed to really simply get into that trade by having a very simple plan, a very simple invalidation. Okay. If I show you this on XO, that was the daily open that we hit to the dollar, by the way. As I'll show you, this was a pretty, I want to say it was like quite an easy long. But what you can see is here, this is the daily open. And look at this. If you look left, we hit the daily open there to the dollar low daily open. Absolute dollar low before the extreme move to the upside. What we also done here was after getting into that long, we start to form bullish CVD divergences. So this is a higher low. This is a higher low. And the CVD is making lower low, lower low, lower low. So I'm thinking to myself, oh my, this is a special trade because I've got in near the lows. I know where I'm wrong. And then I start to see the bullish CVD on top of this. Well, obviously my eyes are kind of lighting up thinking, oh, this is going to hopefully be a nice trade. And, well, I think we can say it was a nice trade, really, because we've made our way all the way up over $2,000. Okay, so it's pretty nice. In terms of resistance, I mean, I think the resistance is absolutely obvious and very obvious right now. Where's the resistance? Well, it's this high, isn't it? There's your resistance. To be honest, that's the main resistance I would be looking at. So we know that this move has been characterized really by doing this lower high, lower high, lower high, lower high, lower high. So maybe this is our lower high and we do make our way back down here. That's potential. Alternatively, we actually flip this level. And if we flip that, I'm still looking at the same levels. I believe you move up to the first target would be $38,000. If we clear that, I'm looking towards $40,000. I think those are your two targets above you, $38,000 and $40,000. Okay, the last the last thing that could happen is a swing failure pattern of this high. So if we actually do something like this, we move up above that high, close back down below. That actually for me would be a short. I'd place my stop loss above the high and I'd look to trade it down. really simply. Okay. So those are the probable, the only things that I'd be looking for now. Number one is that we put in the lower high and we come back down. Number two is that we do a swing failure pattern of the high and come back down. Number three, really simply, we actually break the high, we hold that high, and we move up towards 38,000 and then be looking at $40,000. And then I'll judge from there what's happening. But as it stands, I'm only in a long. Maybe if we start to change some sort of 5-minute market structure. So if we come on the 5-minute chart, as you can see at the moment, you know, there's no need to short this really, is there? Because this is actually at the moment going high, low, high, higher, low, higher, 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 high. What you need to really enter a short is some sort of low, lower, higher, and like a change of structure. Like at the moment, it's not got that. So at the moment, I have to think, I don't want to short, to be honest. I just don't want to short at the moment. No, I just don't need to short at the moment, do I? So if we lose market structure, I'll entertain a short. As it stands, my accounts are long. And I'll obviously close this if we lose market structure. I'm happy to do that now. And if we break through, we break through. Keep on with the long. But I think I made that one pretty clear to everybody today. Yeah, I think I made that one pretty clear. Yeah, so if you have any other questions, let me know. But yeah, that's how I managed to capture that long from literally the low this morning. That was so good. This low this morning, all the way up to the high. Yeah. So any other questions, you're gonna have to let me know. I suppose the one question people are going to be probably thinking about are, is this the high? I mean, it is obviously at this point, it'll be a higher term time frame, lower high, but I think at the moment it's going to be very hard to, well, for me, the position that I'm in is obviously long. And the only way I would look to close this is if we actually change market structure. So while this is still making higher highs and higher lows, I'm not actually interested in the short. And I think you always have to like acknowledge that that means I will not short the high of the move. Like to the dollar high, I'm not going to short it. To be honest, like I know that because I'm not actually wanting to. On this one, I would want the step of confirmation, which would be a trend change. Okay, so this has to make it low, has to then make a retracement, it has to break that. That's your trend change. Okay. So that's what I'd be looking for to close out of the position. Really, 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 really simply. Yeah, I think that's everything really that I wanted to make you all aware of. So yeah, I suppose the way that I'd approach this now is if we change the trends, I would close my long. I'm telling you, I would close the long if we change that trend. Where would I end? I would also happily take a short. If we change the trend, I would short a trend change as well, because the setup would be lower high, lower high, lower high, lower high, lower high. And we actually had this triangle pattern that a lot of people were looking at, which would be if we broke out here and this is a fake out, we could come straight back down. So you have to remember, a lot of people will have bought up here. You know, this is the thing, buying up here is really dumb. Like I would not buy up here for a new trade. You know, you have to remember my long was here. Buying up here is not the best idea because what you're doing, you're literally buying into resistance. So buying here is obviously very dumb, I would say, to be honest. Buying here is pretty dumb. You wanted to either buy the breakout here, you wanted to buy down here. Those were two acceptable longs, but longing here is really, 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 really dumb. So, you know, I think it's pretty dumb to long here. So I want to stress, I would not long here, but I also wouldn't be wanting to short. I'd wait for the trend change. If we get the trend change, I think that you can say that this is a fake out, and I suppose I'd approach it along this sort of lines. Again, it requires the trend change. I'd approach it along this sort of lines, really. Looking down for about 32. I think you could probably even get it. I'd probably look for this. Okay, come back and take those lows. That's if we get a trend change. It's very, very, very dependent on that. Like at the moment, I'm not gonna take that short, but that's what I'll be looking for, back down to those lows. I suppose I could look then for take profit 2 down below the overall lows. But I'm not short at the moment. I'm only long. I just want to stress that. Okay. If we change the trend, I'll short. But until then, I'm not even going to short. Yeah. So there we go. I believe that's all the questions that have come in. Well, they are. All the questions have come in. I have taken. I have then explained tonight why and when I will use log scale. And I've given you some really great examples of that. I really imagine now everybody fully understands log scale. It's such an important feature of charting and trading to understand, especially for your high term time frame swing traders, which I know we do have a lot of people in here. I've explained EOS, which I think the opportunity still remains on EOS. I do. But again, just want to remind you all one more time that this monthly is a big level, whether you want to trade it here. To be honest, you could have got in on that engine 0.8. That's nothing really, is it? But you might want to approach this as, I'm going to leave that, leave that in the air. You can think, is this better? Is this better? And then I've taught you through Bitcoin. I taught you through the long that I took this afternoon and how I've managed to ride that all the way up $2,000. Wasn't really so difficult. And what I'd look for to short. Okay. And again, this could be a fake out. You could get the fake out this, which actually comes all the way back down. That would be very bearish. Okay. That would be very bearish. To be aware of that. Where it is right now, honestly, I would, if I was in no trades, like if I was in nothing right now, I wouldn't short here. I would want to wait for the trend change. I wouldn't long here because you'd be longing into resistance. So if I was in no trade, I would literally not take a trade right now. I'd either wait for the breakdown or I'd wait for a back above that resistance. I would not take a trade where it is here. Okay. I'd remain patient basically. So if I was in no trade, I would remain patient right now. But I'm long. So there you go. Yeah, there you go. Ready? Hope you've all really enjoyed tonight's live stream. What I will say is, should you have any other questions, please come across to Discord, write your questions in. Probably the best place to ask your questions is in trading help. So this applies for the champions and the contenders. If you ask questions in Bitcoin chat, there's a high probability that the question will either get missed or it's just not going to be answered, because this is the place for technical analysis. So if you do have questions related to trading, ask in trading help. If you have a general question, you can ask in general chat. But yeah, trading help, best place to ask questions. You'll definitely get an answer. General chat for any other questions. Bitcoin is only for technical analysis. So if you ask a question in Bitcoin and it doesn't get answered, do not be surprised. It has to be answered in the trading help or the general chat. So yeah, should you have any questions, ask along in there, and I will catch you as soon as this ends. I'll be back to trading and in the Discord with you all. So thank you everybody. Thank you ever so much, everybody. Want to wish you a very good evening. Hope you've really enjoyed. Watch this video back a few times if you need to. And that's me signing out. I'll catch you all a little bit later inside of the group. Thank you, everybody, and goodbye. Cheers.